what happens in the US, we all get hit. What happens in the US stock market, it will have a ripple effect regardless if you're investing in Philippine stock or regardless if you're investing also in the crypto market as well. What's interesting to note though, I mentioned this in my second channel, Crypto Conviction, that crypto markets were down, but they weren't as hammered as what it was over the past few months. That somehow this affected the market cap of the US stock market more than the crypto market as a whole. Hey guys, so as you all know, last Friday, markets dropped massively. There was over $1 trillion that was wiped out in the US market cap. And to give you context of how big that entire wipeout was, the entire cryptocurrency market right now, by the time of this recording, is way below $1 trillion. So what was wiped out of the US stock market was massively bigger already than the entire crypto market as a whole. Just to set a context also on that entire drop, what caused it to happen, why are people jittery, please do note that markets drop when people sell. People sell when there's a sense of uncertainty. So what was the sense of uncertainty that was dished by Fed Chairman Jerome Powell? What did he actually say? So this was in his annual Jackson Hole policy speech. The entire speech centered around battling inflation, that the Fed, Jerome Powell, their main goal is to drop inflation no matter what the costs are and no matter if the economy has to suffer some pain or it gets hit massively while they're trying to fix inflation. Please do note right now that the US is undergoing one of its highest inflation rates that it has experienced in the longest time. And their goal is to bring it lower to around 2.5% from where it is right now, north of 8+%. So for that to happen, one of the biggest things that they're doing is increasing interest rates, which they have done already massively over the past few months. Please do note, just for context in all of this, the interest rates in the US were close to zero a couple of months back. It's not just that they increased it, they aggressively increased it to 2.25, 2.5 with the intent also of raising it by another 0.75 basis points this September, which they said they are inclined to do so depending on data that they would actually receive. So please do note this. I've said this in a lot of the videos that I created, that every time interest rates are increased, this is not good for capital markets. This is not good for the stock market because number one, every time rates are raised, it actually means that when you put your money in US bonds, you will get a higher rate of return already. When you have billions stashed and moved into US bonds, this satisfies large institutions that want to get not just free money, but money that's also risk-free. And again, this causes markets to go down. The entire trust and context of hitting the economy so that inflation would get better was what caused all of this to happen. And please do note this wasn't something that caught people off guard because they have been very, very consistent that they will do whatever it takes in order for them to actually bring down inflation. When you put that all together, it will bring slower growth to the US economy. And not just that, it would produce softer labor market conditions also for the US economy. And this hits everyone. What happens in the US, we all get hit. What happens in the US stock market, it will have a ripple effect regardless if you're investing in Philippine stock or regardless if you're investing also in the crypto market as well. What's interesting to note though, I mentioned this in my second channel, Crypto Conviction, that crypto markets were down, but they weren't as hammered as what it was over the past few months. That somehow this affected the market cap of the US stock market more than the crypto market as a whole. To give you some notes of what was also mentioned during Jerome Powell's speech, he actually said this: the central bank will use our tools forcibly to attack inflation that's running near its highest level in more than 40 years. And what's interesting about that was people were speculating that inflation would be lower given that the consumer price index and the personal consumption expenditures price index were relatively down for July, but pretty much energy costs were relatively low also for July. But the entire context of Jerome Powell was that they're looking at it from a longer time horizon, that they're not easily swayed by just 1 or 2 months of data, and they're not easily swayed by 1 to 2 months of economic data. So watch out for inflation, because at the end of the day, that will be one of the biggest things that will decide how markets will go over the next few months. Because as long as that remains higher, given that the Fed has already raised rates over and over, over, until we see inflation go down, until we see it soften, we can't actually see monetary easing. We can't actually see rates go down, and there won't be a lot of free money yet. So all of those cards should line up and fall side by side before we could actually see quantitative easing again and the lowering of interest rates. And then the general sentiment also that people are not as pessimistic, because when people are more optimistic, they liberally would deploy more capital. They liberally also would be willing to take on more risk. And as they're willing also to take on more risk, that would flow into asset classes that are more volatile, like the stock market and the crypto market as well. Just to wrap this and to make sense of what was going on, he's saying that buckle up, the US economy will still be hit. It will have to endure these times. It's not the most optimistic and fruity times for the US economy. As they continue to hammer down inflation and raise interest rates, there will be a massive spillover on how the economy will go, and it will affect jobs, it will affect people who are borrowing, it will also affect expansion, and there will be ripple effects on this as well. So what does that mean for you as an investor? And I want to address two types of people: those who are looking in it for the long term. Same thing, it doesn't really change the growth prospects of investments that you want to position in, especially if your timeline is the long term, 5, 10, 15, 20 years. What do I say about that? I was in Apple yesterday. I was checking out some of their products, and people were buying, because people buy Apple because of brand. People buy Apple because they like their products. And given that there's a lot of things going on, that they have a shortage also, but those are all short-term. And short-term things like that allows you as an investor to be able to pick up the good ones. What am I saying? Anytime that there's economic uncertainty, anytime that things get scary, it's true that we don't know how low it could go. We don't know also how long it could last, but we do know that it will end. Either you have enough cash to be able to accumulate, build a base, form something that's actually life-changing, and also have enough patience while this is all going on. It should be enough time also for you to build as much of a stockpile that when it goes back, you get to reap the benefits of it. So if you notice what I'm actually saying, your style shouldn't actually change, because what you do when it's not so scary, it doesn't matter. Because if you know what you're buying, when all of this is said and done, they will still come out on top. Then it's an opportunity. Same also for the crypto market. If you believe that Bitcoin will still be here 5, 10, 15, 20 years from now, drops like this, news like this, shouldn't actually startle you, but should allow you also to continually focus and go through whatever your plan is. And for you also not to be scared, and for you to just continually push and continually invest. In the same way, for the second part of this, for those who are traders, it doesn't matter. You'll notice it also that it still moves in support and resistance ranges. So if you're trading, you're going long, hits the support, buy, hits the resistance, sell. You bought at the support but it breaks down, you'd have to sell at a loss, you'd have to cut loss. In the same way also, it breaks down, hits the resistance and starts to go down, you could also short. So what I'm saying is this: markets like this, news items like this, conditions like this, could be a time for you to be able to position well, or could be also a trading opportunity for you to maximize the volatility. So that's what happened over the past few days. From an economic perspective, it's not the rosiest of times, but it's when the times are not as exciting that money can be made as well. I hope you guys got a lot from this. I hope that this was something that was very insightful for all of you. If you stayed up until then, appreciate it. If you could press the like button, subscribe, smash the bell so that every time videos like this are created, it pops up in your phone and you also get notified. And if you believe that videos like this added value to you, put a comment down below, because the comments help this video also pop up and get recommended to other people as well. And if you want to know the things that I know also from technicals or fundamentals or the crypto markets as well, I have thousands of videos down below. I've written 5 books, and I also have webinars that you can benefit from as well. So you can all check it out. And if you want to sign up and invest in crypto or stocks, I have links down below for you to be able to be part of it. That's it for now. This is marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.